Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money stuff that runs the world, and sometimes it is less exciting than watching paint dry. But today we've got a report that is packed with numbers that tell a story about how a big fund navigates the wild world of investing. So buckle up as we decode the latest filings from SMALLCAP World Fund. So what is the big picture here? We're looking at the financial health and performance of this fund for the year ending the 30th of September 2025. Think of it as a financial checkup for this investment giant. SMALLCAP World Fund is all about investing in companies with smaller market values, aiming for growth. They've got a lot of different ways people can invest in them called share classes. And each one has slightly different costs and features. It is like choosing between different subscription plans for a streaming service. Some are cheaper up front, others might cost more over time. We're going to dive into the numbers. Let's start with the Class A shares. This is like the standard package for many investors. For every $10,000 you invest, the cost for the last year came out to about $106. That is roughly 1.03% of your investment going towards fees and expenses. Now for the performance, the fund's class of shares actually managed to gain 6.62%. That is a decent return. But here is where it gets interesting. The benchmark they compare themselves to, the MSCI All Country World Small Cap Index, which is basically a big basket of worldwide small companies, did much better, gaining 12.82%. So while the fund made money, it did not keep pace with the overall market for small companies. That is a key observation from Warren Buffett's playbook. Always compare performance to the broader market. So what's behind these numbers? The report says global stock markets had a strong year overall, but also saw some bumps from trade uncertainty and global tensions. Most areas did well, but some countries like China, Taiwan, and Korea really soared, helping to balance out losses in places like India. Even though global small companies grew, they did not grow as fast as big companies in the market. The fund itself saw good returns from industrial, financial, and tech companies, but holdings in consumer discretionary and healthcare sectors actually dragged down the overall results. It is a reminder that even a fund focused on growth can have its own internal challenges. Let's look at it this way. If you had invested $10,000 in Class A shares without sales charges and let dividends and gains get reinvested, you would have seen a gain of 6.62% over the last year. Over 5 years, that average return is 5.04% annually, and over 10 years, it is 8.93%. These numbers, while positive, fall below the performance of the benchmark indexes. This is why understanding the benchmarks is so crucial. It gives us a clear picture of how the fund is truly performing against its peers and the wider market. Let's glance at some key numbers. The total assets managed by this fund are a massive $340 million. That is over $81 billion. They hold 864 different investments in their portfolio, which shows a good level of diversification. The total advisory fees paid were $455 million, and the portfolio turnover rate, which is how often they buy and sell investments, is 41%. A turnover rate like this suggests they are actively managing the portfolio, but not excessively so, which can help manage costs. Now, let's get to the real juicy part, the investment portfolio. This is where we see where all that money is actually invested. We're talking about common stocks, and right at the top, we see industrials making up 24.15% of the holdings. Companies like Comfort Systems USA, Incorporated, and Diploma PLC are listed. Then we have financials at 15.77% with companies like Accession Group Limited and Affirm Holdings Incorporated. Information technology is also a big player at 14.94%, featuring companies such as Lumentum Holdings Incorporated and Kokusai Electric Corporation. It is important to see how the fund is weighted across different parts of the economy. Digging into the industrial sector, we see Comfort Systems USA Incorporated with a value of over $1 billion. Diploma PLC is also a major holding. These large positions indicate a strong conviction from the fund managers in these companies. In financials, Accession Group Limited has a value of over $500 million. Affirm Holdings Incorporated, a company known for buy now pay later services, is also a significant holding valued at over $400 million. This shows the fund is participating in modern financial trends. For information technology, Lumentum Holdings Incorporated is the largest holding in this sector, valued at a hefty $656 million. Kokusai Electric Corporation also makes a significant appearance. Moving to consumer discretionary, which are goods and services people buy when they have extra money, we see TopBuild Corp as a top holding valued at over $800 million. Dollarama Incorporated, a discount retailer, is also a substantial investment. These companies are sensitive to economic conditions. So seeing them prominent here tells us the fund managers are betting on consumer spending. In the healthcare sector, Max Healthcare Institute Limited is a very large holding. Ionis Pharmaceuticals Incorporated and Insulet Corporation are also significant investments valued in the hundreds of millions. This shows a strong commitment to the healthcare industry, which can be more resilient to economic downturns. The materials sector, which includes companies dealing with raw resources, has companies like London Mining Corporation and Sandstorm, Gold Limited as prominent holdings. These are often tied to commodity prices and global economic activity. Consumer staples are the everyday necessities, and companies like ELF Beauty Incorporated, which has seen a lot of investor interest lately, and Raia Drogasil, a Brazilian pharmacy chain, are major holdings. These are generally considered more defensive investments. For communication services, Nippon Television Holdings Incorporated is a very large holding. Magnite Incorporated, which is involved in digital advertising technology, is also a significant investment. In the energy sector, companies like Weatherford International and Meg Energy Corporation are listed. This sector can be quite volatile, influenced by global energy demand and supply. For real estate, Charter Hall Group REIT and Embassy Office Parks REIT are among the top holdings, reflecting investments in property and real estate trusts. The fund also holds preferred securities, which are a bit like a mix between stocks and bonds. In information technology, PsiQuantum Corp, Series D preferred shares, and Techion Corp. Series B preferred shares are notable. These are often in private companies, meaning they are not traded on public exchanges, and the fund managers have determined their value. Interestingly, we see a category for restricted securities. These are investments that cannot be easily sold on the public market. Companies like PsiQuantum Corp and Einride AB are listed here. This indicates the fund is involved in potentially higher growth but less liquid investments, which can be a source of both higher returns and higher risk. Now let's look at the statement of assets and liabilities. As of the 30th of September 2025, the fund has total investment securities worth over $81 billion. They also have cash and receivables, bringing their total assets to over $82 billion. On the liability side, they have collateral for securities on loan, payables for purchases and repurchases, and other expenses, totaling over $553 million. This results in net assets of over $81 billion. This is a massive operation. Looking at the statement of operations, which is like the profit and loss statement for the year ended the 30th of September 2025, they earned over $1 billion in investment income from dividends and interest. However, fees took a big bite, with investment advisory services alone costing $455 million. After all expenses, the net investment income was about $387 million, but the real story is in the gains. They realized over $3.3 billion in net gains from selling investments and added another $1.3 billion from unrealized appreciation, meaning their investments grew in value even before they were sold. This resulted in a massive net increase in net assets of over $5.1 billion from operations. The statements of changes in net assets show that for 2025, net investment income was nearly $388 million. Net realized gains were over $3.3 billion, and net unrealized appreciation was over $1.3 billion. This led to a net increase in net assets from operations of over $5.1 billion. After distributions to shareholders, the total increase in net assets for the year was over $4.2 billion. This shows significant growth for the fund. And finally, the opinion from the independent auditors. Deloitte and Touch LLP states that the financial statements and highlights present fairly the financial position of the fund. They've been auditing American funds companies since way back in 1956, which speaks to a long-term relationship and trust. It is important to have these independent checks to ensure everything is being reported accurately. So what is the takeaway here? SmallCap World Fund is a gigantic fund managing billions of dollars. They had a solid year in terms of growth, particularly from selling investments that have increased in value. However, their performance for the reported year did not quite match the benchmark indexes, and their own holdings caused some underperformance compared to the overall market. This is not uncommon, as active management, while aiming to beat the market, often has periods where it lags. The fund also has a significant amount invested in restricted securities, which suggests they are looking for growth in potentially less traditional or private markets, which comes with its own set of risks. The sheer scale of their investments and the diverse share classes show a complex operation designed to serve a wide range of investors. The consistent audit opinion and detailed notes suggest a well-managed fund, but it is crucial for investors to look beyond the percentage gains and understand the underlying strategy and how it stacks up against the broader market. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out our Discord community in the description for more discussions and insights. Thanks for watching. See you next time.